Okay. So based on what we were talking about, so I watch the chart from the 1 hour, right? And then once price gets to my zone, then I will go down to the 15 minute, identify the structure, right? So on the 15 minute, if you can't see it on the 15, then you can go down to the 5. I can see this here, this pull back. Now, I like to see a closed candle on the see that didn't close. So um so because that didn't close for me right now, this would be my swing. Now, if you want to wait for price to break here, just know that it can come down here and push back up. And if it pushes back up, then you can wait again to see if it starts breaking structure to the downside. But I would be waiting for price to break um, this low. So whichever low it is, right? I would be waiting for price to break the low, and then I would be looking for an imbalance or order block to set my entry for the sell down to. You can either target this low, you can target this low, or you can target this low. And it's probably going to hit all three, right? But you want, if you want to, depending on what type of trader you are, because you know once price hits here, it's going to pull down some and then pull back. And then it'll target the next low. And then it might come here, pull back, and then target the next low. So, um, and you can say you can see that these are relatively equal lows. So, um, of course, if you target this low, um, this is like almost a 4% trade, about 78 pips. And then of course, once price breaks. So, and the reason, let me let me explain. And let me go to my 1 hour. So the reason why I'm looking for sales now, because price was bullish, right? Price was going up. And the reason now that I'm looking for sales is because price broke here. And for me, I look for the candle close, not this wick right here. I look for the candle close. So when price broke there, I was looking for price to come back to, and let's see, let me move this out the way. Move this out the way. So, okay, so once price broke here, um, and let's just look at the overall, right? Look at the bigger picture. So if we look at market structure on the bigger picture, we have here, here, and then this is just a whole push right there. Price broke this low, right? So if you fibbed from here, if you fib from here, that went back to the 50. So if you fib from here to here, you can do from here to here if you want, right? But price never played out all the way. So before it started moving back up to the top side. So and what I mean by played out all the way, because I have to remember there are new people on the call. Um, once the fib pulls back, it should tap into the negative 27, at least the negative 27, right? Um, so it did not tap into the negative 27 before it started pulling back. So I am going to include this part as the zone. And as you can see, we have some daily key levels right here, right? So price broke this low, broke into this zone, pulled back, did not give any indication of um, a continuation of a sell, pushed up, pulled back, and then gave pretty much a tied order block at the zone, at the zone, and tapped into this order block here, started rejecting, and then started moving. So, and remember, I'm trading from the daily. So this is on the daily. So the same thing I would do on the daily would be the same thing I would do at the 1 hour. Okay. Same thing I would do at the 1 hour. Once price broke through the zone, it pulled back to the zone. So m my guess is that it's going to push all the way up here. However, because price has now broken the last swing, right? This was the last swing. We're going to, this is probably going to pull back to the 618, maybe even the 78, possibly before going back up to the negative 27. The indication that it's selling is this last break of structure here. This is a 1 hour break of structure here. So now that price has pulled back up to this zone, so now I'm really looking for price to come down here. Um, I always put it at the top of the zone. You can put it at the 78 if you want. I normally just put it at the top of the zone. Um, and then once price gets here, you have to wait to see what price wants to do at that moment. Because again, price could keep going, right? Um, but I would definitely wait to see what price wants to do at this zone. So price broke structure, pulled back. Let's go down to the 15. So price broke structure, pulled back into the zone, and then it broke structure again. So now I'm really confident that this zone right here is going to sell, tap into these lows, or tap or come all the way back down to this zone. Does that make sense for everybody? Anybody have questions about that?
Makes sense.
So everybody understood that?
Sounds good to me.
Okay. Anybody not in elite, let me ask that question because y'all better know. Because y'all better know. Anybody's not in elite. Does that make sense for everybody? Yes, Selena. And God. Y'all should know. Y'all should know this. Y'all should know this. Let me look at the chat. Chat, 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 chat. Hold, hold on, y'all. Somebody's hard headed. Hold on. Okay, y'all. No questions on that? We done for today? Oh, we done for today. Yay.
And you hilarious.
I'm just Was there any pair
Kim,
anybody
I
want?
do
Huh?
I do have a question, Kim.
Yes.
When you are looking at closed candles, like
Mm-hmm.
you were pointing out on the break, what you consider a break is a closed candle.
Uh-huh.
So I've noticed that although there's a closed candle beyond the wick of the first candle,
Right here.
like, is that truly a closed? Yes. Is that truly a closed candle because it's behind the candle that isn't a closed body candle?
What you mean?
Does that make sense?
What you mean?
So because that first candle isn't a full candle that has closed beyond that wick,
Um,
everything beyond that,
Wait a minute, hold on. Because you talking about this camp? No.
the initial candle, yes, that first candle has a wick on it.
Uh-huh.
And you don't consider that one the
No,
actual break, right?
no. No.
You consider that next red candle, what, two, three
This
candles
one.
over?
Uh-huh.
Okay, so because that candle is behind, on, is it front, in front? Yeah, in front of the one with the wick, is that really a closed body candle beyond, like
You
in that
mean
mood?
you mean because this is down here.
Yes, yes.
Now, yes, for me it is because this is the swing that we're looking to break. I'm
Okay.
not looking to break these here because if we keep moving the posts, it's never gonna break. You see what I'm saying? So
Mm-hmm.
hold on a second. Hold on, y'all. Hold on. Okay, I'm back. All right. So yes, so if you keep moving it, it's never gonna break. So if And then once this wick, then you would go here. And then once this wick, then you would go here. Once this wick, then you go here. So it would never break the wicks. You're looking for this, the last swing to be broken. And actually, hold on. So this pushed up, broke. This broke. So really the last swing is here. The last swing is this one right here. Either way, it broke the last swing. It broke this swing and it broke this swing. So we know at that point, price is going to start pulling back to, and if we fib the move, I think it came back to the 88 or 78, one of the two. Price came back to the 88. And then started breaking structure. This last swing to the downside. So what do we expect price to do? Now pull back to that zone. I'll look for you can either look for the imbalance, the order block, the last institutional candle. This one came back to the wicks of that order block. If you were waiting for it to come back to the last institutional candle, you could either have gotten in or when I say institutional or the order block, same thing. So you can either set your limit here. That was 25 pips. I like 20 pips on pairs. So if I were just setting a limit because I was going to bed or something, this is how I would have set it. I would have set it at the order block. And it would have been 25 pips. Okay. I like I said, I'm not a fan of 25 pips. I mean, I like 20 pips at the most, but this is still a 4%, almost 5% trade. Okay. If you're watching the charts and price pulled here, you see that it pulled here. Okay. You see that price pulled here. You look at market structure. See price pulled here, pulled back, pulled here, pulled back, right? And it did not break any of these lows and then pushed up and then gave a pullback and then pushed up some more, right? So, and then it rejected. Now, I don't necessarily go down to the 5 minute to see what I need or want to see, or the 1 minute. I just know that I'm looking at market structure from the 15-minute time frame. And until I see a break, a violated order block, or this violated order block here, this is the one I would like to see. Because remember, this never closed candle above for me. So I would like, now if the market opens next week and gives me a closed candle up here, then I would move my swing to here. But for right now, my swing is right here. So if market open and close above here, then I'll move my swing to here. And then once price breaks there, I will look for my imbalance or order block, set my limit to then start selling. For those who but I need to see it break first. I hear everybody say they want catbird, they want catbird, they want catbird, right? But for me, catbird means that price has broken structure, pulled back to the imbalance or order block. That is the catbird for me. I don't necessarily want a catbird from wherever this what is this price here? 21. I think I don't know if it's 21. Now y'all don't want to get me to reading price because I am not the one. 450, I guess. 210450 would have been. I don't know. All I know is, okay, um, the fact that it came to this 78 or the 88. Now, if I'm looking at it from here and price pushed up into this order and then gave me this order block, I would definitely be waiting for it to come to the 88. What's that price? 464, 2.10464. If you want to get in there, that's fine too. That's another entry that because you know it broke structure, you know it's pulling up to the 78 or 88. If you wanted to say you wanted to set two limits, you could have set one at the 78, maybe a smaller lot size, right? Until it showed you that it's going to start selling. If you felt like maybe it'll come to the 88 because we have because there's nothing in here on this 15-minute like a order block or imbalance or something that's showing you a price. And then you could say, okay, well, maybe it'll come back to the 88, right? Maybe it'll come back up this zone. You could have set a limit with a larger lot size. And the reason why I say your lot size could have been larger is because your stop loss is going to be smaller. You see that? That is 8 pips. I definitely would have rounded it off to 10. That is 8 pips. So you can use a larger stop loss, right? To versus you setting your limit here and your stop loss is the 20 pips, which would have still been good as well, right? But you would rather set your you would rather have a smaller lot size with a 20 pip stop loss than and have you would rather have a smaller lot size with a 20 pip stop loss versus the larger lot size with I just said that backwards. You would rather have a large, did I say large or small? Okay, let me just say it over. You would rather have a smaller lot size with the 20 pip stop loss than a larger lot size for the 20 pip. Does that make sense? I'm confusing myself today.
We get it. We get it.
I was just making sure the people, for everybody who, there's some new people. Well, not really new, but there's some newer people on the call today. So, say for instance, you had and because you know I'm the visual. Say for instance, you had a $200 loss, $200 account, personal account. Okay. And you're saying, oh, since I have a $200 account, let me use $2 a pip, right? So let's write it out. So you have a $200 account and say you're trading at $2 per pip. Okay. With the 20 pip stop loss. 20 pip stop. Let me wait a minute. Hold on. Because I think some people need the visual. Why is this wearing weird? Okay. There we go. All right. So we got a 20 pips stop loss. Why is this doing these? Hold on, y'all. Okay. 20 pip stop loss. Okay. So you're either going to, so say price, that wasn't the move, right? And you had a 20 pip stop loss at $2. So you're either going to lose the $40 or you can set your, so that would be $40. However, if you set the $2 at with the shorter stop loss, and what was that? $10. So you can lose $20 or you can lose $40. So I would say put your $2 stop loss here, put your $2 a pip trade here, and then maybe either a $1 or a 50-cent trade here. And if you're not going to put a stop loss, of course, I would say put the hedge. Okay. And we're going to talk about hedges today too. So if that makes sense, if no one has questions on that, I'm going to talk about the hedge while I'm here. So we're going to pretend this is two hedges. Did somebody add something?
Hold on, I was getting ready to before you move forward.
Okay. Oh, go
This
ahead.
might be a silly question, but
no silly
what
question.
is that? Is that a 0.20? Is that what you're saying?
Yes, 0.2.
Okay.
Yep. So $2, and yeah, let me put that because 0.20. Yep, that was not a silly question, Cherry. Okay, so now that we're here at the hedge part, this is our swing. Remember, we're going to use our swing highs and swing lows, not internal swing highs or swing lows, our external swing highs and swing lows as our hedge points. Okay. So if price breaks through or had broken through, you thought price was going to come here and sell, but price breaks through this high, then you want to put a hedge through here. Now, I would personally set my hedge at whatever these two. So if you had, say if you had these two entries, or if you have just one entry, whatever the total of your entries are, I would set this hedge. And I'm only going to set one hedge, but I will set it at whatever these two. So meaning if this was a 0.1 and this was a 0.2, then I would set this hedge as a 0.3. Does that make sense?
That makes sense.
Okay. Now, for the hedge, now this is just how I do personally. I don't wait for price to come up here and then cut off a head. I don't wait for price to start selling back to cut it off. One, because I'm in my personal account. Okay. Two, if you were in a prop account, that's when you have to wait for price to come back to your direction to start cutting the hedge. I'm not doing that. I am going to take my profit at my next zone. I'm taking my profit at the next zone. I'm building my equity at this next zone. So once it gets here, these two are in the negative. This is in the positive. They're canceling each other out. And then I'm taking my profit because I already know if price is breaking this high, and let me remove everything. Let me remove it.
Did you say you can't take profit on the green trade and the prop?
No, because then once you take profit here, then and these are in the negative, it can it can breach your account. Because if these are in a negative $500, depending on what your depending on what your rules are for your prop firm, if these are in a negative $500 and you breach your account, then you can't take your profit here. You got to wait till price pulls back and get you out of whatever your prop firm rules are before you start cutting the hedge.
So, but if you didn't over leverage and you weren't over,
if you did not over leverage, then I would say you can, but you definitely have to watch to make sure. You got to calculate.
yeah.
Make sure you're not breaching your account. So, and the reason why so we're just going to say this is the high, right? This is our swing high. I know if price breaks through here, I already know price is going up to here. And it may pull back some or whatever, but I know with uncertainty that the price is going up to this zone. So that is why I would take my money here. And then if and when price starts pushing back down, then I would be in the sell going back down. So not only did you get profit here at this zone, you built your equity. If you see market structure, right? If you see market structure, you see it break, once you see the break, you're pulling back to your zone. This might be your first entry. once price break here, it's going to pull back again. Then you get your second entry and at least take it back down to this zone. And I don't care if it's 50 pips, 20 pips, 65, I don't care, 72 pips, right? At least you'll have two entries back down to this zone, and then you can see what price wants to do. If it's going to continue selling down, or if it's coming back here to retest this break and then keep pushing back up again. So for a personal account, if you instead of setting your stop loss, you can set the hedge. So this was at I'm going to put this here because this was at the 88. This was at the 78. I want to say it was right. I can't remember what it was, but I think it was right here. I think it was a little further down. But y'all get it. Y'all get it, right? So you can target this low if you want. You can go however you trade, the way you target whatever targets you want to trade or want to target, right? So here's the hedge here. And then you would target here. Again, this would be equal, the hedge would be equal to your two that you thought were going to sell. Okay. And I'm going to repeat that I'm only speaking from a personal account because I hate when prop accounts on hedging on a prop account was a nightmare for me. Okay. So I'm only speaking from personal accounts. So I would say if you're on a personal account, set a stop loss. Any questions on the hedging?
Thank you.
Yes.
Can I just repeat what you just said so I can see if it makes sense to me?
Who said that?
Adrian.
Hey, Adrian. Okay, so okay. Let me I'm going to erase everything.
Okay.
Wait a minute. Let me just erase everything. Okay. All right. So already go from so we're looking at the bigger picture, right?
Yes.
So from a big picture standpoint, I know that price broke this zone. And I know y'all are saying like, wait a minute, hold on. Why we got to go to the big picture? Because the big picture just makes it make sense for me, right? So the bigger picture broke structure. So now because the bigger picture broke structure, I'm looking for the pullback. Okay. So if I mark up my daily key levels, meaning this was a key level here. Okay. This was, so you can mark up this high, but then there was also price pushed down and pushed up and then broke structure. So I would mark up this little zone right here. This little zone right here, right? So price came to that zone and reacted. Price came, pushed up, pulled back, broke structure here, and then broke structure here, right? So waiting for price to pull back to that zone, which it did. And then it started breaking structure to the, did it break that? Let me see. It didn't quite break that yet, but I'm looking at the daily. So this was the first break for me. That's what I need to see. It pulled back. And then I'm gonna go down to my 1 hour. So once price broke, it came back in the zone, broke back in the zone, and broke structure. Okay. So now once price broke this structure, then I can fib my move, right? Fib my move, price pulled back to the 78 and completed the fib move. Like I need to see it complete the fib move. It came back to the 78, played out to TP1, TP2, which is a negative 27, and then TP3. Now for me, all I need to see is it complete the negative 27. But when it ran through here, because I'm still identifying market structure, right? I'm still identifying market structure. Once it ran through here on the 1 hour, no green candle. Then it ran to the negative 618, no green candle. It pulled back, but for me, it has not given any type of structure yet. I don't consider this high broken as structure. I'm not going, well, let me go down to the 15 minute. I don't consider this was that high. I don't consider that as broken structure. It's not giving me any kind of structure right here to say get out, right? So it pushed back up. I'm not buying. I'm not buying. It did not provide me any type of structure. And then it started breaking, violating this order block right here. So it's selling down even more, right? So if I'm looking at for structure, I see that there was a push down here, a pullback, and then a break. And I'm going to show you what I would see as the structure, as the break of structure. So that pull down and then that broke. So that made, you can look at this as the high. The fact that this was an order block that was disrespected. So this came back, broke. So once it broke, you have some level of structure you can look at, right? So once that came and broke, violated both of these order blocks. So this order block pretty much respected the order block. It came into the order block and then pushed down and created another order block. You can mark this as your high, but you have a violated order block here. So once price violated this order block right here, this price broke past that closed candle, past this zone, closed candle, past this zone, this would have been my zone for the buy. However, I always want to see price come back to the demand or the supply zone. So with that being said, you could have entered here, noticing that you have an order block here, right? Because you always just want to be on the lookout for where you are on the market. Price, market structure, and price action. That's only 20 pips. I mean, you could have taken it there. You could have taken it there if you're scalping, right? So if you're a scalper, is Terry on here? Terry the scalper. You could have taken this here. Got your 20 pips. But you already know price broke a swing high. It is coming back to either fill this imbalance, tap into the imbalance, or even tap into the order block. This came and first it filled the imbalance right here, and then it tapped into the order block and gave you another order block, right? If you miss this move, then you can wait for price, because here's your next swing high. You can wait for price to break that high for the pullback to some type of imbalance or order block. There was some imbalance up in here, and price pulled back to that and then left the building. Okay. So if you miss this one, you get a second opportunity once price starts to break this last swing, pulled back into imbalance, and then it went off. Then it left. So the first entry would have been from this order block to, now I'm trading from zone to zone. So based on a higher time frame, my daily, that would have been to here. Because this broke, never came back until now. Okay. So that would have been 293 pips. And then you wait to see what price wants to do, right? So once price, where was I? 15. Oh, so hold on. So we're right here. So this would have, yes, I would have taken price. I would have wanted to take price up here, right? But there is a little minor zone right here. So once price got there, I would have had to wait to see what price wants to do. And as you can see, price broke through, but price was never breaking this high right here. Closed candle. Price pushed up. And let me go to the 1 hour because that's where I would have been sitting. Okay. Price broke through. It pulled back. It gave a bullish order block. I definitely would have been looking for a buy from this zone to keep buying. But as you can see, price never broke these highs. Once price gave this wick right here, this rejection wick, I would have either go ahead and taken my money because price pushed up and then rejected all the way back down. So I would have taken my money probably right here. Okay.
But you wouldn't have been watching this on a 1 hour, you'd be watching this on a 15, right?
Huh?
You would have been watching this particular trade from the 15 though, right?
Yes. Once I saw this 1 hour order block, I would have gone down to the 15. 30-minute or the 15. And as you can see, when it pulled back, and let me mark up the 1 hour order block. Let me just mark up right here. So down on the 15, right? This was the order block right here. So when it pulled back, now it gave a bullish order block here, but we all know I want to see it in my zone. Once this order block would have happened right here, I would have been like, okay, here we go. There's my order block right here. So I would have wanted to trade from here to, and I would have personally fibbed my last move. Now, I don't like the fact that it did come to the, what's this, the 38. So I definitely would have been targeting the 618, okay? That would have been my target. Once price gave this order block, pulled in, and then wicked past these high, because one, it for me, I really want to see it. I really want to see it break the highs and then pull back. But that never happened, right? It didn't do it here. It didn't break this high and then pull back. It didn't break this high until right here, but I'm looking at this order block, right? I don't even know this happened yet. So I would have been waiting for price to pull back to break the high. Like it never broke. And this was my high right here. It never broke this high. So that would have been a cue that something's not right. Price is not moving like I need for it to move. So once it pushed up and rejected, and then it came and gave another bullish order block, and I would have been like, okay, let me wait to see if price comes back here to give a little minor bullish order block. It did not. So once price got here, no order block, got here, no order block, got here, no order block, and then broke these lows. You see how it broke that low? First of all, this was the high, and then this little minor low right here. So I wouldn't have considered that the break right here to the downside. I just would have been looking at that as the pullback. Although it didn't break my high, I would have been looking at a pullback, and it's giving me these little confirmations here. But once this confirmation happened and price never broke this high, and then I started getting a bearish candle, a bearish candle, a bearish candle, a bearish candle, and then it broke this low. And I'm just going to move this for now. And then it broke that low. Then I would have been out the trade. I would have take my money. I would have taken my money to see what happens. Because now this has broken through my zone. And when I say my zone, this was the zone I marked up. This is the 1 hour key level that I marked up. So it broke that zone and then broke structure. So once it started breaking structure, now I'm back to my bias from over here where price broke, pull back. So now I'm back to my sell bias here. So it broke structure, pulled back, started breaking internal structure, right? Pull back. So now I'm waiting for price to sell back down to these lows. Now let's price show me something else. Right now, it's creating lower highs. So what I want to see here is price violate this order block. And this is on the 1 hour, right? I want to see price violate this order block, pull back to my zone, and then sell. And wherever you want to set your targets, that's up to you. That's what I want to see.
Kim,
Yes.
When you get a chance, could you go
Oh.
when you get a chance, could you go over like your confluences specifically? When you get ready to enter a trade, like step by step, so to speak. Or
That
not
was
step
it.
by step, but
That was
like
it,
your
right?
thought.
That was it right there.
I'm
So,
gonna rewatch it.
so I need, for one, the price has to be in one of my zones. It has to be at a zone. It has to be in one of these black areas, right? So who asked that question? Who is that?
This is Jaria.
Oh, hey, Shadaria. Okay, so price has to be
Hey.
in one of my levels. So it's either going to be and I'm gonna just go to the 4 hour. It's got to be a daily zone or a 4 hour zone. But y'all already know that if it's on a daily zone, it's automatically a 4 hour. Anything below daily is automatically a key level, right? Anything at the 4 hour zone below 4 hour, 1 hour, 30 minute, 15 minute is anything lower than that is the key level for that zone. So this was my daily, right? This is the 4 hour. Price came down here, reacted, pushed up. Price came through here. So I'm expecting the retest back to this zone, right? So once price pulled back to this zone and then started breaking structure on my 1 hour, then I know I'm waiting for price to pull back to that zone that started the break of structure. I'm waiting for price to pull back. So once I get that break of structure, I can pull out my fib, either wait for price or set your limit at a 78 or 88. That's what I like price to come back to, the 78 or the 88, to then continue selling. So price tapped into the 88, right? And then go to the 15-minute. Price tapped into the 88 and then started breaking structure to the downs, violated this order block, violated this order block, violated this little order block right here. These are the wicks for that order block, violated that order block. So now what are we looking for? Price is always going to come back like once, and that's where the patience comes in. Once you start getting breaks of structure, once you get this break here, we know it's pulling back. And yes, you can buy this up to the zone. You can buy it up to the zone, or you can buy it up to the 78, or you can buy it up to the 88, wherever you think price is going. Because once price gave this order block here, this bullish order.
Excuse me, Kim. I'm sorry. This one here is GN,
This is GN, yes.
and you looking and we expecting it to sell, correct?
That's what I see for now. However,
That's what I saw too. I just wanted to make sure. I'm sorry.
I'm now waiting for price to break back into my zone because right now it's at the top of my zone, right? It's at the top of my zone. So I'm waiting for price to break this low here to then pull back to my zone to then start selling. So that's what I would be looking for. Now, what I'm looking for is this is the first confirmation. It broke structure. The second confirmation, it pulled back to the 78.88. Sold and started breaking structure, right? That's my second confirmation. My third confirmation now is I'm waiting for price to break this low, pull back to my zone. Once price breaks this low, I'm going in with a either $20 or $30. Actually, I can go in with a $40 too, but I get scared like y'all too, okay? I get scared like y'all too. But once price breaks this low here, because remember, once price broke structure, this was the swing. This was the last swing right here. And can y'all let me move the fib so y'all can see it. Once price broke this here, right? You now have this was the swing low. Hold on, because now I'm looking at this. This pushed up and price broke here, right? So now my swing is right here. This is my swing right now. So once price starts breaking this low, and it'll probably do both lows. It'll probably break both of these lows. I'm looking for it to pull back into the zone and then start selling. And I really just stay on the 15. I don't look for a 5 swing. I can see it on the 15. If it starts breaking this low and this low, specifically this low because this is an order block, right? If it violates this order block, yeah, I'm looking for price to pull back to my zone. And then once it pulls back to your zone and it gives me the stop loss that I'm willing to mark up, which is a 20 pip. This is above that swing. Then I'm taking it down to, like I said, you can take it down to these lows here. That's 170 pips. Actually, I would take it to this low here. Okay. That's 183 pips with a 20 pip stop loss is a 9% trade. So, and I'm just going to put this there as the TP. Now, I really want price to go down to here. So, when and or it, right, this is 185 pips. That's more than enough to flip an account, to build your equity, to do whatever you need to do for your account, right? If you don't want to take it there, if you just want to get 100 pips, All right. If you eat, which is more than enough, it's a 5% trade because price and all I'm doing is looking at price action. I'm looking at there's imbalance here, right? I'm looking at equal equal lows here, right? So price just may come here to here. Maybe you get 111 pips. Price may come here and then start pushing back up again to back to the zone. If we go by so that's why you gotta just trade in increment. Like if you're not a swing trader, go from zone, just look for smaller zones to trade. Okay. So because this broke structure, again, this may just be pulling back to and that right there is a 618. It could pull back to your 78 to then start pushing back up to the zone. Now, if we're trading based on how Todd trades, or if we're looking at the weekly, not even a weekly, let's move this out of the way. Okay. This could be pushing back down. This is rejected. This could be pushing back down to this demand zone. We don't know, right? But it could be. It could be pushing back down that you might get 1,000 pips from that move. Right? So if we're looking for price to come down here, oh shoot. I don't know how many pips that is. We'll see. Oh, sorry. That was my thingamajiggy. Okay. So price could be coming back down to gather these equal lows. Price could be coming back down to tap into that daily for price could be coming back to fill this zone to here. Price could be, we don't know what it's going to do. So trade what you see, not what you think. Trade what you see. Price could be coming back down to here. So don't take it too far. And that's why I just like to look at it on the 4-hour or the 1-hour. Okay. So I would definitely, you can you can trade it to here if you want. It's all up to you. So from here to here, that's only 20 pips, but I wouldn't be trading that. But the way price is setting it up, it is setting up to start selling. So I would be looking for the sells.
Kim,
And
I have a question.
Yeah.
When you're trading from a 4-hour zone to a 4-hour zone, or a daily zone to a daily zone, time frame do you watch for, like breaks of structure, like going the opposite direction?
On the
Like
1-hour.
on a 1-hour. Okay.
I sit on the 1-hour. Like once I see, you see this broke on the 1-hour, that was confirmation for me for the pullback to fib this move, go down to the 15-minute.
But that's also the time frame you use to get out of your trade, the 1-hour.
Because if I'm trading from a 1-hour zone to a 1-hour zone. So this is a 1-hour zone. This is the 1-hour zone. Right? This is a little minor 1 hour zone right here. Because price came here, reacted, and then broke through. And you see how this 1 hour zone, this 1 hour level of support, then this 1 hour level of support got broken through, came back as support. So this is a 1 hour zone for me. So if you wanted just to trade from this 1 hour zone to this 1 hour zone, that is perfectly fine. But I need to still see this 1 hour break, violation of this order block, to then pull back and then to sell to this 1 hour zone. Meaning it's not breaking this high, it's not breaking this high, it's not breaking this high. It's starting to break structure to the down. So I would pull this in. I mean, wait for this to pull back or set a limit. Again, the pips, the stop loss is only 20 pips, right? I would set a limit to then sell down to here, but I need to see it break, violate this order block first on my 1 hour to then get in on the pullback for the sell down. Like I need to, when I say trade what you see, I need to see the break of structure, violation of an order block, or a violation of an order block, which is usually a break of structure is a violation of an order block. For the pullback from my zone, from one zone to the next zone. That makes sense?
Yes.
Okay.
Kim, I have a question. This is Adrian.
Hi, Adrian. Yes.
How did you learn a market structure like you do?
Watching YouTube videos.
Really?
That's it.
Oh, wow, Kim.
I'm telling you, watching YouTube. Y'all have, I watch YouTube videos. So like still to this day, I will watch at least 5 videos a day.
Wow. But you gotta be careful who you watch because everybody don't teach the same thing, right?
Exactly. So I had to watch. I watched until I found one that made sense for me.
Okay.
Like once it's clear and makes sense to me, then I'm watching that video. And of course, once you watch a video, they start pouring in more videos that are similar, right?
Yeah.
Then I just keep watching until it makes sense to me. And then I just go from there and then apply it to the chart. Back test and apply it to the chart.
Okay.
Like the whole breaker structure video, like I mean, like candle close breaker structure. Like that's when it started. I started getting other videos that showed me what to look for when a breaker structure. What to consider a breaker structure. Once I found that, and then I started back testing, showing me that for instance, like this zone here. Like because there was no candle close, right? Oh, wait a minute. Well, I can't see that. Hold on. Because there was no candle close, that this may not be going up. This is rejection, rejection, rejection. And then it started violating this order block. So once it violated this order block, right? There's an order block right here. Violated this order block, pulled back, gave rejection, rejection. It tapped it. One, we're in a zone. That's my first confluence. I'm in a zone. 2, it broke structure, violated this order block of that zone. 3 pulled back to the zone, reject it, reject it, reject it, reject it. Now you can either wait for it to break the zone again, or you can go ahead and set your limit. Once it broke here, you had the order block, imbalance, and order block right there. That could have been your first entry, right? That could have been your first entry above, and then you want to put your above this high. Okay.
Okay.
Now, once it came back, reject it, reject it, reject. Hold on. Let me do this so I can get this out. Okay. There we go. Okay. Once it came back, reject it, reject it, reject it. It gave a bearish order block here with the rejection candle, the wick that tapped into your order block. You could have either waited for that, or for confirmation that it is going to be selling, it came and broke another level of structure, right? So what do we wait for once it breaks structure? We waiting for the pullback.
Okay.
Right? So once it broke, there was another order block up here in the zone. And I'm going to put it above this high. That was 18 pips. So you can move that to 20 pips, right? It tapped back in, and then you just start targeting the lows. You can target this low. You just start targeting all the lows. This low, and then you could have just targeted that low as well. So these lows that you're targeting, this can be a TP1, and you can either start taking some profit. You can then set TP2 to take some profit. Then you can target TP3 to start taking profit. And then it pulls back, right? So instead of being scared that it's going to, because at this point, this is your swing high. Because price broke here, right? So now this is your high right here.
Right.
You already know prices. Well, I'm not going to say it's not, but it would have to go all the way up here to break this high to start buying. You have a whole imbalance right here that you're expecting price to tap into to then start selling.
Okay.
So once price came into your zone, right? And it actually filled this imbalance, the whole imbalance. Once you start seeing violated order blocks, which happen here, right? Then you can mark up your, because once it broke right here, this candle right here is where it broke. You know, I look for the institutional candle or the order block, move it up above the high, and then you can start targeting. That was the last low that didn't get tapped into. So you just start targeting the lows, right? So if you had targeted the next low, that was 132 pips. The next low was 140 pips. And what do you know when price starts breaking the lows, you should be expecting price to start pulling back, right? Now, if you're looking at the big picture on this 1 hour, we're looking at the big picture on this 1 hour. Where is your last major swing?
You asking me, Kim?
Yep.
Okay.
Are you able to
How do I do that? Just
the annotate?
annotate.
Should be a
Okay.
little pencil in the bottom left corner.
Okay, so from the date, okay, this is the hour chart. The last major swing.
Mm-hmm.
I don't know if you see it. You see it? Okay, hold on. Right here.
Nope, not that one.
Mhm.
It's
Okay,
before that, because we're still here. We're still in this area right here. So what was your last major swing before that?
I see a swing here.
Okay. Now, okay, you warming up, you're getting hot. But
Okay.
price was going up, right? Price was going up. So what was your last bullish major swing?
Okay, on the left side, it would be right here, Kim?
Nope.
No? Okay, let me see. And it wouldn't be over to, okay, the last ups, the up. Okay, so my last up,
The last major swing
and it wouldn't be over here.
on the 1 hour. You hot, you warm, you warm, you
Oh,
warm.
hold on, let me just mark it. I'm over too far?
Yep, you over too far.
My last major swing.
Keep going, keep going. Okay. Okay, you real hot. You real hot. Okay, erase. Okay, take
Okay,
the left, erase, hit clear or the trash can to clear everything off.
trash can. Okay,
Okay, so this was your swing high
okay,
right here, right? So that means this was your last major swing. Because remember, everything from here below to the peak, to the low of that is your swing. So
okay,
you can't really count this as your major swing because price never broke this high yet.
okay,
Okay. So with that being said, this right here, and this is my little tool right here. This was the swing that, so once you had this 1 hour major swing and then price pulled back. Okay, let me do this. So
okay.
once you had that 1 hour major swing, you're expecting price to pull back to your 78 and 88, right?
Yes, and it
But
did.
what did price do? It did pull back to your 88, right? And then
Mhm.
pushed up, but then it started selling. And what did it do?
It broke a low.
It broke the low, right? So
Mhm.
that was my cue. Okay. Price broke the low. It's starting to break this low, and then it broke this low. Because this was a swing here, right? It broke this low, it broke this low. So that's when I said, okay, once I pull back to, because now these are all violated. This is all violated.
Mhm.
So once price pulls back to my zone, and although it did break out the zone, but then it broke back into the zone.
Mhm.
So you have to wait for confirmation. So now once you start getting the violation, once you start breaking these swings, you can take this swing from here at least to the zone, right? And then what do you do once it gets to that zone? You take your money, and what do you do after that?
You can get in for a sale.
Nope.
Before.
So once price gets to your zone, you take your money, and then what do?
Run.
Huh?
I'm taking my money.
You want to get in for the sale?
Nope, not yet. Not yet. You take your money
and run.
Wait for price to show you what it wants to do.
Okay.
So once you got out here, this right here, price, you got out at this point right here, you got 236 pips, right? If you were at a standard lot, you got 2,360 pips. No, you got, yeah, that's right. Oops. Yeah, you got 2,360. You got $2,360. Okay. So once you got your money, take your money, put it in your pocket.
Okay.
And then
close trade.
Huh?
Close my trade and wait to see what price is going to do.
Close your trade and wait to see what price is going to do. Now, if you're watching the chart, let's see what time this happened. This happened at 11 o'clock. So if you're watching the chart, this happened at 12. It pulled back. So if you identify your market structure. Oops. How the heck I do that? Okay. You watching your market structure. So price is here. It pulled back, didn't break the low, didn't break this low right here, right? And then pushed up. So if you're still in the trade, right? If you're watching the trade, let me say that. If you're watching the trade and you see prices not breaking market structure, you can stay in, right? Until price, it broke out. It gave a bullish order block right here, right? When it pulled back and tapped into the order block, it gave a bullish order block and then it turned around and gave a bearish order block. So now you can either take your money here because now it's going to be trapped between order blocks, right? So you don't know what it's going to do. Wait for price to show you what it wants to do. Price then came and started violating this order block. It violated this order block, right? So I'm going to wait for price, and it gave a bearish order block here with this big old wick. I'm going to wait for price to come back into this order block because it's in my zone. I am taking my trade from my zone. If I don't get in at the zone, then I'm not getting in. If I miss it, I miss it.
Okay.
So now that price has violated this order block, broke this low, because this was our last swing. Actually, this was our last swing right here. This one here. Because price broke here, pulled back, and then broke the structure here, right? So now this is my last zone here. So once price broke here, price pulled back into the zone, pulled back into this order block. So this could have, once it pushed back in, this could have been the entry here, right?
Okay.
But let me see.
37 pips.
You always want to wait for price to break. It broke this low. So now your brain is shifting to sales. Now you have an imbalance here. You don't know if it's going to tap into here. You don't know if it's going to tap into this order block and drop. You don't know if it's going to, for me, that's the institutional candle, which was the last up candle before the down move. It's 37 pips. If you can do 37 pips is not bad. Okay. You just have to know that your lot size has to represent that 37 pips. As you can see, price almost pulled back up to it, depending on your broker. the spread could have tapped you out, right? So if that was the case and price started selling back down, breaking these lows, then you can get, you can get back in. Price is breaking lows. What is it going to do? It left me this order block with this big old wick, right? So you can, if you want to cover the wick, that's 64 pips. If not, you can just cover, you can just either cover the high, which would have gotten you wicked out, right, at 34 pips, or once price came back to here and gave you this bearish order block, you could have marked that bearish order block up and covered that wick. Okay. Still 34 pips, 35 pips, but the wick has already shown you that it is come up here, grab whatever liquidity, and then wants to start moving. So once price pulled back into that zone, then you're going to start targeting lows. First low, 115 pips. If you're watching the chart, you will see that the first 1 hour came, second hour, 1 hour came, broke this low. The third 1 hour, not breaking back up into the zone, you could have just stayed in. The fourth 1 hour, you got a bullish candle, but it didn't break above, back up here. So you could have stayed in. The fifth 1 hour is a bearish and gave you a bearish shorter block. The next 1 hour candle, bearish. The next 1 hour, all these 1 hour candles, that's why I stay on the 1 hour until price shows me, gives me something, right? Because on the smaller time frames, it will trick you out. It will trick you out the trade thinking, although I have this 1 hour zone marked up on the 15-minute, right? Now,
so wouldn't it be good if we watching it to put your stop loss in profit while if we're watching the charts, like to see which direction it's going?
You could. I mean, but you definitely want to give yourself, yeah, you could. You can definitely like especially once it gets to the zone, you can move your stop loss to entry, right? But then once price once price got to the zone, you got a 15-minute candle. See, I wouldn't have gotten tricked out because I have my zone marked. Sometimes I don't see your zones marked, so you don't know if this pullback, because this gave a bullish order block, right? You would have been thinking, oh, shoot, it's giving a bullish order block. It's going back up. Well, it's going up, but it's got to break through this zone, pull back before it starts to push, before it starts pushing back up. It's got to break through this zone, break swing highs. Like y'all have to remember to look for market structure. Break this high before pulling back to go to the zone. If price had come here, broke this high, then I would be looking for it to come back to the zone. You can take your profit back at the zone and then start pushing up to the top side. However, price came to the zone and I'm on the 15-minute. I don't like watching the 15-minute. I just like really don't. It gave you a bullish order block. But what did it do? It tapped into the zone and then started selling back down. It tapped into your zone, not breaking your zone, and then continue selling. So now, let me go back to the 1 hour. Where am I? Okay. So now it gave a bearish order block. So now you're targeting the rest of these lows. You're targeting this low. You're targeting this low. Okay. Then you're targeting this low. Then you're targeting this low. And even on the 1 hour, this 1 hour started pushing back up, right? but there is no structure that it has created to break for a buy. Yes, it broke past this high, but there is no structure at this zone. Right here, it created a little structure, right? So price would have to break this high at this point. But price pushed up and then started pushing back down. And here is your structure at this point, right? So at this point, price pushed up, price pulled back into an order block. And I believe on the, so the first thing is price broke this low, right? Price broke this low. I'm just going to delete all these green lines. It's driving me crazy. Okay. Okay. So once price, this was a swing low. This was a major low. This was the low that caused the down move and the break of these structures. So once price broke that low, you can go on your 15-minute. You had this push down, a push up, a push, and a break. So this was the high at the moment. Once price broke this high, this is structure. This is now structure. And I feel like I said so much that I'm not saying it right. Structure, okay? Not structure, structure. So once price broke that high or broke these highs, price, you're waiting for price to pull back. Price is either going to pull back to the wick of the order block, the body of the order block. You never know how far it's going to pull back. If you fib that move, price pulled back to your 78, price pulled back to the 88. So you can either mark up your 78 for entry or just mark up the wick, the top of the wick, right? And if you mark up the top of the wick, because this happened at 11, so you can put your entry here. You want to cover this. That is 13 pip, 12 pips. So of course, I'm going to put 20. Okay. And because it swept this was the break. Because this was the low of the break of structure, right? Oh, wait a minute, hold on. Yeah, because this was the low of this initial break of structure, price swept that low. So now we're expecting the pullback to the 78 or the 88 of that break. So now, wherever that is, I don't know. And let me not say the 78 or the 88 because this is an order block on a higher time frame. So the way Todd teaches is coming back to, once it comes back to the 50%, 618, 78, 80, I personally feel like it's probably going to pull back here and then start buying up to the 78 before selling. However, it can pull back to one of your discounted areas. And then when it pulls back to your discounted area, that's when you wait to watch see what price is going to do. So it pulled back to a discounted area. This was the initial, what time frame am I on? 1 hour. So this was the initial last swing of this move up. It pulled back. It pulled up, gave minor level break of structure on the 15-minute, right? And then on the 1 hour, it broke this low. It broke this low. So price is going to pull back to the area where it started breaking structure. Now, yes, I would love for it to come back to this area. But you see what it did? It pulled back to this zone here. This was the initial break, because what's right here? A violated order block, right? It pulled back to that zone and then started breaking structure to the downside. So once it starts breaking structure, I am now looking for a pullback to continue selling to the downside. So I'm looking for price to come down to here. But you can still trade it from zone to zone, get your coins, see what happens once price gets here. If price blows through on the 1 hour, then I'm going to stay in and take it to the next zone. Wait a minute. Who said, Alicia, you said wait? Oh, wait a minute. You said wait. Oh, what was I talking about when you said wait? My bad. Matter of fact, I'm really looking for it to go. The next low would be right here. That would be my next zone from here to here. If I'm marking up 1 hour key levels. How much is that? Oops. Short. $323 pips. Adrian, did that answer your question?
Yes, ma'am.
Okay.
Thank you so much.
So yes, what my confirmation is, I wait. I'm looking for a break of structure of the swings, the major swings, whether it's a major 1 hour swing or whether it's a 1 hour swing or a daily swing. And I'm looking to just trade it from one zone to the next zone. Is Alicia still on here?
Oh, Kim, I was just saying, wait, when you asked Adrian, what was she supposed to do at that point? I wasn't referring to wait.
Oh. Yes, take your money and wait. So yes. So I am waiting for price. Shoot, price might come up to here. Who knows? But because it broke structure, I'm looking and came up here and then started breaking structure. Because once I get a break of structure, I go to my 15-minute and then it started breaking structure. So now I'm looking for it. I'm really looking for the next move. I'm waiting for it to break structure. And then it's go time. Oops. So yeah, waiting for the break of structure. Waiting for the next break of structure. Let's say that. And then it's go time. Any other questions? If not, I'm out.
Nope, that was great, Kim.
Thank you, thank you.
Well, fabulous like you.
So I think GN is the move, the trade for
the week, month or so. For the week.
I think so.
Okay.
Yeah, I spotted it early.
Oh my gosh, he spotted it early. So these were my trade ideas from last night. I was waiting for them to make their move, right? So based on the daily, this was the last swing high right here. So I'm waiting for price to pull back into this zone. It might break below the zone, tap into this order block. But if I see it break back above here, then UCAD, I'm buying. And that's on the daily, right? We're on our daily. So we mark up our high daily zone here. And so if UCAD taps into this order block, breaks back above this zone, then I'm going from zone to zone. And that's almost 250 pips. But I need to see it create structure back, tap into this order block. I need to see it tap into this order block, right? It might even come down a little more, break back into the zone, and then, of course, identifying structure, right? Like it could come down to here, right? Break. I need to see it back up here and then take it to the top. So it needs to break. Right now, this is the high that I made, but I think there would be more structure in this zone to look for. But if not, it would have to break this high, pull back into my zone, and then to the top side. So UCAD is the next one. This is a key level. I'm waiting for it to tap into an order block. If it breaks into the zone, then we're buying it up. If it breaks structure, pull back into the zone, then we're buying it up. For US 30, don't trade it. Don't trade it. Okay. Don't trade it. For me,
Kim, can you point out the lower daily level on UCAD?
UCAD. The lower daily level is here.
Mm-hmm.
So if price, follow market structure, guys, follow the market structure. Telling you, if price taps into this order block, violates this order block, right? Violate this, then you're looking for price to pull back, and then you just take it to this zone.
I think my biggest problem in like learning how to trade was being patient and actually learning where the market is going to go to. And now I'm starting to understand because I was getting in too early, and then then it wasn't going where I thought it was going to go or what I was looking at, you know. But now that you're explaining all this, I feel a lot more confident
in seeing it. Yeah. Yeah. So yeah, definitely you have to be patient. Again, like when you're looking for price, like when price pulls back into this order block, right? That's the order block. We know this is the order block, the top of the wick, and then this is the bottom here. If price violates that order block and then start breaking these lows, then you're looking for price to pull back into your zone and then continue selling.
Okay.
So although I am looking for a buy, right, because it broke this structure, it may not do that. But if I'm patient enough to see breaks of structure in this zone on the lower time frame, the 15, I'm gonna look for it on the 1 hour. I'm gonna be on the 1 hour till I see a break of order block with some input, with some momentum, right? With an order, with the move. And then I'm gonna go down to the 15-minute, see if it broke any kind of structure. If it broke structure on the 15-minute, then I'm going to wait for it to pull back to then buy it. I mean, step by step, just like that. Okay. Like I said, US 30, don't trade US 30. Okay. Now, US 30 did tap into had to push up, we had to pull back. We had to push up, we had to pull back, we had to push up. Okay. Price broke this low, broke this low. Price pulled back into this order block and has been pushing up. Now, there's an order block right here. Yes, you can, on a smaller time frame, you will see that as structure, right? So this was the last push up, and this was the last. So price broke above here, pulled back into the imbalance. Could it push back down? Well, it already, on the 4 hour, it already tapped into the order block. So it pushed into the imbalance and then started pushing up. So I would like to see it break because this is a little structure here. So I would love to see it break past here, then pull back, then buy up. But I mean, I think it's kind of going bullish right now. I would have to look at the dollar to see what the dollar is doing, but it could push back into this zone here and sell back down. Okay. And I say that because let's go back to my daily. This is my daily key level here. Okay, did it tap into that? Yeah, it did. So that's the daily key level. This is the next daily key level, right? So price could push back down into here and then start buying up. I mean, it wicked and rejected. We ended the day with a bullish, but you can get a bearish order block here, push back into the zone, and then start pushing up. You don't know what it's going to do, right? So this would be until price either break above here, I would be looking for buys, or price might come back into the zone and start selling. So I'm going to patiently wait to see what price is going to do. 4 hour. Again, price can push up in here and push back down. Price can tap into this institutional candle. That's why I say don't trade the middle. Price can tap into this institutional candle and sell back down. Once price got to this zone, if it gave me bullish momentum, then I would definitely take it back from this zone to this zone. That's 615 pips, okay? I'm taking my money, I'm rolling. Once price break above these highs, if I'm trading from zone to zone, one key level to the next key level, the next key level would be here. So I would go from here to here for 700 pips. If you were not patient enough to wait for that, then the next key level, which is, we're on the 4 hour now, so we're looking at 4 hour zones, would be from here to here, which is 400 pips. Still good, 439 pips. And why did I mark up this zone? Because it was a level of support that then turned into a level of resistance. It was support. It got broken through with a strong candle, pulled back, became a level of resistance. So depending on where price pulls back to, whether it's this zone or this zone, I will watch market structure and why I think price is going to push back down, because price pushed up, started breaking these lows, this low, started breaking those lows. So I'm thinking it's pushing here to push back down. It might even push back down here. So once price gets to the zone, identify your market structure and then trade accordingly. Stop trading in the middle, Terry. No, I do not do indicators.
I be paying attention, Kim. I be knowing where to get in and out at.
Terry.
But I'm listening.
You be trading in the middle, sir. Trading in the middle. No, I don't do indicators. When I first started learning how to trade, they didn't teach us with indicators. So I'm not an indicator person.
I was just asking because it kind of helped. Sometimes to me, it can kind of help with your entry. When I heard Anna asking about it.
My only indicator.
Saying she was getting into early.
My only indicator, and it's not an indicator, is my trend line. And once price broke here, I'm going to remove this. Once price broke this swing, this was the swing high right here. The 4 hour swing high. Once price broke, it pulled back, tapped into the imbalance, and then pushed back above my zone, pulled back to the order block. So I think it's pushing up. Now, again, because price broke this high, hasn't broke this high yet, but that it may continue going up. I don't know what it's going to do, but all I know is I'm not in a trade, so I'm not going to hop in just because it's pushing up. This will be my next zone. Once price gets here, set my alert. Once price get there and show me what it wants to do, then I will trade that accordingly. Next 4 hour zone is from here to here. So you can trade from 4 hour to 4 hour. The next one after that is from here to here. That's 236 pips. It's still a good pip count, but this is US 30. I'm not even gonna look at that with y'all. Okay. Next, moving on to oil. Okay, daily. Here's my key level here. Okay. I would love to see price pull back to this zone, pull back at least to this trend line, right? I would love to see price come back, feel some of this imbalance, possibly tap into this order block. I would love to see that happen. Price came here, gave me bullish momentum. Then I'm getting in from here. The next key level is up to here, which is 100. This was 100. Wait a minute, hold on. This was 1,000 pips. Or you can wait for it to go back up to this zone. Okay. I'm really waiting for price. Once price breaks this zone, you can put your money on it that it's going up to, I'm gonna just say these highs for now, right here. That's the $100 mark that Todd's been talking about. So once it breaks this key level, you can bet that it's going up to here. Price initially pushed down, tapped into this key level and broke back down. There was another key level here, price tapped and broke this zone. So now we're going from, like I said, I would love to see price, because price, if you're looking at market structure, price pulled back, push. I would love to see it come back. It has not tapped into this zone yet. So I would love to see price pull back into this zone. And it doesn't even have to completely touch the zone, but there is a 1 hour daily order block at that zone that I would love to see price tap into. Once I see that and I see any bullish momentum, breaks of structure, it's go time. It is go time. Okay. And as you can see, I have an alert right here. Once that alert goes off, then I'm going down to my, I'm on my 1 hour. I see a 1 hour bullish order block. I'm going to the 15-minute. Make sure it's breaking structure. Once I see the break of structure, then I'm waiting for the pullback to get in for the buy up. Zone to zone. And that's it for me. Oddly enough, I have been trading Ethereum, which is so weird. And Ethereum is or has been just a very clean trade, pair to trade. So I'm really looking for price to come down here. Unless price starts breaking, price broke this low. Unless I see a break above this high, because if you go down to a smaller time frame, as you can see, that's the high. So that's the last swing. Okay. So once I see it break above here, if I see it break above here, then I'm going up. But as you can see, price pulled back, started breaking lows. So I'm looking for a pullback to sell down, back down to this zone I have right here. That's what I'm looking for. I want to see price come back to retest this daily swing right here. Now, again, if it doesn't come down there and starts to break above here first, then I'm going from here back up to this high here. Or even higher. Because if we fib that last move, it's at least going to the negative 27, maybe 47.50 maybe, or whatever. It's I don't look at the numbers, okay? I'm taking my coins. If I start getting breaks of here, I'm either going to get out here at this zone here, or I can get out at the negative 27. But I would love for it to come back to fill this and complete this move right here. So once it starts buying up, I know it's not coming back. Okay. and then I mean EU, EU. So we have a daily zone here, right? Price broke through, broke this low, broke through, pulled back into the zone, right? Gave an order block, pulled back into the order block. So this may be a move for next week as well. So on the 1 hour, price pulled back. There's no structure yet for me to get in for the buy yet. Okay. As you can see, it pushed up. It closed below, I believe it closed below this order block. Maybe you're sitting on it, not sure. Okay. I would need to see some form of structure. A pull back into here, a break below here, and then a break above, something to show me that it's going to continue up. This is against the US dollar. So I need something to show me. It might push up in here. It might push back down here, push back into this order block, push back into the zone and start selling. So I need to see some form of structure. And I'm going to keep saying it. I'm going to keep saying it until I'm blue in the face. Okay. And if it comes here, then where are we targeting? We're targeting these lows. We're targeting this low. Let's go back to we're targeting this low. We're targeting these lows. We might even be targeting this low, depending on what the dollar is doing. Might even be these lows right here. It doesn't matter, but you just want to target the lows until price gets to that low and then start showing structure. Always look for market structure. Always, 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 always. I mean, based off of market structure and price action, you can see price broke here, pulled back, and it's pushing down. So it might just keep going. Although it's above my zone, it just might keep going back down. It might have just came to retest this initial break to then start selling back down. So always wait for price to show you what it wants to do. On the 1 hour, I don't see. It ain't giving me nothing for a buy or a sell at this point. And that's how I do it. So those 4 pairs, 1, 2, 3, 4, wait a minute, 1, 2, 3, 4, 5, 6 pairs, or 6 instruments, or 6 assets are what I'm going to be looking for next week. Now, I will be doing a weekly analysis. And based on this weekly analysis, price pull back into an order block, right? So again, now I'm more inclined for the sell than anything, because price was been going down, 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 down. When you look at the higher time frame, it might push up a little bit more. Maybe it'll push up into this zone here and then sell. So if that's the case, at the zone, if price taps into our zone and then gives bullish momentum, you can at least take it up to this zone here. It's like 100 pips. So wait for price to show you what it wants to do. Okay. And that's all I have for today. Anything else? Anything?
No, thanks, Kim.